550 points, gone, in a single session, and most investors are still asleep at the wheel on what this actually signals. Here's what's really going on beneath the headline numbers, and what you need to be thinking about right now before the opening bell. The Dow Jones Industrial Average just cratered more than 550 points in one session. Not a slow bleed, a single-day wipeout. The trigger? Rising U.S. Iran tensions sent shockwaves through global markets and lit a fire under oil prices. Geopolitical risk is back on the table. Hard. Oil is surging right now. That's not just a number at the pump. That's a margin killer for every company that moves goods, burns fuel, or runs logistics. The S&P 500 is in the red. The Nasdaq's three-day winning streak snapped. Just like that. Berkshire Hathaway, Palantir, Micron, major names caught in the crossfire of this sell-off. Nobody got out clean. But here's a flicker of relief. As of Tuesday morning, futures are pointing higher. Oil is pulling back from its peak. Does that mean the storm is past? Not even close. But here's what nobody is saying about this yet, and this is the part that actually matters. The mainstream narrative is treating this like a one-day event, a blip, a headline risk that fades by Wednesday. That is the wrong frame entirely. Geopolitical risk premiums don't disappear when futures bounce. They get embedded. They reprice energy markets. They reprice insurance on global shipping lanes, and they quietly rewire institutional risk appetite for weeks, sometimes months. The investors who got hurt today aren't the ones who watched the Dow drop 550 points. They're the ones who panic sold into the close and locked in losses right before the futures recovery. That is the real damage, self-inflicted, avoidable. First, look at energy. Historically, conflict-driven oil spikes create asymmetric opportunities in energy equities. This is where informed investors start doing their homework, not their panic selling. Second, context is everything. Geopolitical flare-ups have triggered sharp short-term drawdowns throughout market history. Every single time, quality index positions recovered. Selling a broad index position into conflict-driven fear has almost never been the right call in hindsight. Third, reassess your risk exposure, not your conviction. If a 550-point drop has you reaching for the sell button on your core holdings, that's a portfolio construction problem, not a market signal. Revisit your allocation. Don't blow up your strategy. The geopolitical risk premium is still elevated. Oil is still hot. And the next 48 hours could tell us everything about whether this was a one-day shock or the start of a broader repricing. What do you think this means for your portfolio? Drop it below. Let's talk through it. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.